Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, June the 5th, 2024. And yes, I'm sure we all already know that the market had a fire lit underneath it. And boy, it just came to boiling and steam and just kind of blew itself to the top. And I shouldn't say the top, to a top. So I'm just going to jump right in here because I don't want to be going on in great length. The only thing I will say is that it continues to be fueled by artificial intelligence as a sector within that NVIDIA, which is splitting on Friday, and then the subsequent other boosts giving to Meta, Microsoft, SMCI, etc. Now, also what kind of came in today was, again, this move from the employment reports, but that's what you're going to read, how the employment reports really reignited that, Fed's going to cut, Fed's going to cut, Fed's going to cut. And we don't have any evidence of anything of that nature. We do have, though, a meeting that'll be coming up, and that is let me see when that is. That's the Wednesday, June the 12th. We have an FOMC meeting. And so pretty crazy. But any case, that we have next week. So, and then we're working our way right into the monthly expiration, and then the week after that, the quarterly expiration. So the month of June, normally, right, summer doldrums. I don't think so. Not this month, not this year. And so I think we're witnessing today what I thought was just two things. We had, again, selling volatility via the VIX and taking that money and putting it back in the market via all of the ETFs and the individual components of our indexes. And it was a dynamic rally. Took a little while to get going. Get everybody out of the pool that wanted to get out of the pool, and taking the S&P down to like 53. What was that number? I think 5,300 or something like that. I got a test. That was 5306. That's as low as it got early. And then it just started to ignite, and it did not stop for the balance of the day. So let's get into the nitty-gritty of a tiny count. So again, a little bit bigger picture. What I'm looking at is that we are in a wave. This was a wave 4. So this has to be the 3. I'm wondering where my 3 is. There it is, way up there. So, but I'm going to open this up so we can look at it. That's the minuet 3. Here's the minuet 4. We're in still a minuet 5th wave up. Now, the minuet 5th wave, in my view, is going to be completing, once it's up there, the minute 5th wave and then the minor 3rd wave. So we still have enough upside left to do. How quickly it gets done after witnessing today, that may fall into place. But I think if we're finishing up a minor 3rd wave, I think that minor 4th wave correction would fit in with what many other analysts and what we're hearing from others, that the market is starting to get ripe for a 5 to 8% correction. Well, remember we were talking before that if we get into that correction, there's where it should come. So we're basically looking at that price territory of the work down from the previous 4th, which was of the minute degree, right? So what we're minute 5 finishing off of that minute 4th wave, that again comes into play with the minor degree 4th wave. So I think that the minute 4 and the minor 4 are going to kind of come together here, maybe a little bit lower, but we'll see once we are down there. So again, here we are, the 3, the 4, we're in the 5th. Now it is subdividing, and it is subdividing beautifully. So again, 1, 2, and then we got another 1, 2. So this is subminuet and sub-subminuet. And then that third wave. And in all its glory, today, this thing pushed up. And it was an incredible day. Now, those that have the patience that like to sit at their computers and trade all day, you just needed to buy one and just sit and wait. The pullbacks were shallower and shallower and shallower as this thing moved higher. And so you likely were not ever really even threatening a rising stop, a trailing stop. And you just got out at the end of the day, or you got out when you thought you'd had enough money. So it was one of those days. And when that becomes evident, you just kind of buy in. Seriously, when you can start to see what they're doing in terms of selling volatility and buying the underlying volatility, and you can see where all that funds are going into, well, you just join the party, buy and just wait, because that's what happened. Now, big question, is this the top of this small sub-minuet wave 3? I think it could be, actually. So now what happened, and this is something, let me just kind of open this up so we can look inside of it. If I just ran just retracements, right? That's all I'm looking for is retracement. The size of this thing are going to make this retracement like really weird. So forget that, that's resistance. Forget that, that's resistance. So what we have coming off, absolute bare bones minimum, 0.236, 53.43. So that's not bad. From here, we get a little bit of a 20 point drop, 23-point drop. Down here, back down to the 13. That's the moving average, right? The 8's probably a little bit higher, but it's all you're looking for. Just come back down and touch the earth via the moving averages. And here's the 20 sitting just above the 382. So that actually, to me, would be our range. And I'm just going to reset this in terms of the color. And 236, and that is in that nice blue. And the 382 is in that nice blue, and the 5. And I'm not going to go much beyond that because I just really don't think it's going to go there. All right, I'll do 618 just in case. But even in a fourth wave, I wouldn't be looking for 618. So I'm not going to go there. I'm only going to go to 50%, and I'm not even looking for that. So there you have it. There's our window of opportunity. Now, the big choice is this the previous fourth? And this was all that fifth of 3? Or is this the 4? So again, because of the nature of that rally, it's very difficult to try to find where we had a nice ABC. You know, ABC, ABC. You know, we can find them. But now, on such a small degree, I'm not sure. So we'd be more reliant on just dropping back down to 0.236 or 0.382. And maybe it doesn't. Maybe all we do get is something like the 53.51, and then it rises again. So what are we looking for from there? Well, we can go by this third wave, and that's marked way up here. This third wave right now, because it's exceeded 1.618, it could come in way up here. So again, this third may not be done. I'm kind of putting it there, looking for a little bit of a pullback, and then we would have a run up probably to 5,400. And this could happen by Friday. Now that would just finish this third. Then we come back down again in a 4 and rise again in a 5. So what are we looking at? We're kind of pressing on these upper levels. And that could happen pretty quickly. When you think about the amount of ground that was covered today, the cash market was up 63, 62 and 5/8. That's a lot. That's a tremendous amount. It really is. And the cash NASDAQ was up 380 points today. That's a lot of inflow. That's a lot of capital being moved in and pushing these markets. So for the S&P, moving averages, guess what? Take a peek. That's on the 1 hour. There's the 200, the 50, the 20, the 13, and all of them are low. All of them are looking higher, 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 higher. So what we went from the negative, now we're back to everybody's in alignment to go up, and that's on the hourly. Let me just take a peek at the 4 hour. And sure enough, see, they've all fixed themselves higher, higher, higher. We're going, we're going. So again, that's the 4 hour. Let's take a look at the daily and see how that's done. That's our last holdout a lot. Look at that, 250, 20, 13. Back in alignment to go up. We were in alignment to go down. We're back in alignment to go up and finish all of this move. Not a bad sign if we can get this thing to pull in a little bit. And then we're going to get that little wave 4, and then we'll have more upside. Now, day traders, you want to follow the price action, but right now it continues to point higher. Don't get too comfortable with anything, because I think it can switch and flip real quick into the other side as a seller or something moves in. So let's be cautious in how we're choosing to trade and follow the price action. So intraday, or just even intra-hour, when I'm trading off of a 2-minute, a 5-minute, 15-minute screen, then you're looking at points of control. You're looking at value area high and low, and how things kind of just, they revert back to that point of control, which will shift depending on the flow of what's coming in. And so you've got those. Then you've got your moving averages down on a 2-minute, a 5-minute, a 15-minute screen. They come into play. And then you have intra move Fibonacci relationships all over the place. And some of them are according to Elliott, and some of them are not. Some of them are just Fibonacci sequences. And this is important. And you put that all together, and that should guide you through for your day. And then always, I will recommend, as a day trader, always, always, always work with a stop. Know where you're going to get out if the market is not going to do what you suspected it was going to do at this moment. Doesn't mean it's not coming in the next 2 minutes, but in this moment it's not. And why risk a large amount of money? Okay, let's go over swing traders. Swing traders are a little bit different. Because we're looking for, again, probably higher levels in the spiders and higher levels within ES options, etc. So it's a tough call, but I'd be looking for a little bit of a pullback, and then you're just going to want to, get long and ride it up. Let's go over and take a look at the NASDAQ. Look at this powering, and it's continuing to power. It's continuing to power up right now. They're just stepping right back in. And why? Well, because here's what you got. NVIDIA adding. And so, and then we got, this one's a little bit lower. Meta, a little bit lower. So what's it being powered by right now? NVIDIA. So when that's done, we might get that pullback. So let's open this one up and just take a look. There's a 3, there's the 4. And let me go right here and open it up into here and look at that. Look at that move. So really off of this low, which was in the 10 o'clock hour at 18,805, 18,800, magic number. And then it just took off, and it did not look back. Obviously, no rip bars. So if we had to, even if as a day trader, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 11th green bar on an hourly chart. Are we extremely overbought? Well, your RSI is telling you. You sure are. So we're looking for a pullback to get in here. Now, Minuet wave 4 down here at the May 31st low at 18,241. 18,002. We're at 19,000, almost 100. Amazing, amazing moves. in less than, what is it, 3 days? The 31st was Friday. So we've only had Monday and Tuesday and now Wednesday, 3 days, 3 days, 3 days, almost 900 points. Wow. Well, here we are. And so what we have in the breakdown, this is minuet degree. So we'd be looking for minuet fifth wave, and it is subdividing. There we have subminuet 1 and 2, sub-subminuet 1 and 2, and we're in sub-subminuet 3. Now, whether that's done here or not, I'm not even marking it because I just don't know, because here's our next level. For this is up here at 19,142, and it might just go there before we get a pullback. So this is the difficulty in the market, is to determine, well, where do we get that pullback? Where does it come in? Because now we're pushing up against what should be a very strong resistance cluster between 19,135 and 19,167. So you can also say 19,130 to 19,170. That's a $40 of resistance. And if the market just goes up and blasts right through it, I will be impressed, but it just tells you it's kind of a runaway. It's a runaway market. And beyond that, there we have it. That's where the wave 3, the sub-minuet wave 3, because we've already gone through 100%, and now we're up to 1.618, and that's 19,267. Considering that we went up almost 400 points today, what if we go another 400 points? We're outdoing that. All we need is 250, and we're there. We're here. Amazing, right? Here we have minuet wave 5, 19,345. I've been showing you these numbers for a while. And now they're looking like they're going to become a reality, where we have this minuet wave 5. And that then completes minuet wave 5, which completes minute wave 5, which completes intermediate wave 5, which would set us up for that much larger correction. Wow. And so again, we're getting the discussion from, what you hear inside the market is that, well, the markets are really kind of working their way up to putting in 5 to 8 to 10% correction. Wow. Well, okay. From these levels, that's a big move. It's a big move. And still, folks, it's just going to be, in the NASDAQ, it's likely just going to be a minor degree correction. At best, it would be an intermediate degree correction, an intermediate fourth wave. So what we'd be finishing all the way up here is a minute fifth, a minor fifth, and an intermediate third. And that's setting us up to a much larger degree correction, which basically takes us back towards the April lows again, even in this market. Actually, no, I take that back. And here, that would just be the starter. So this one I'm going to have to work on, to be honest with you, because let's go back out here just for a quick second, because here you see in the S&P, that overlapped that, so it made it 1, 2, 1, 2, 1, 2. Whereas here, it's like 1, 2, and that really does work out to 3, and we're inside the 4. So what would be finishing is the intermediate third. What's first up? Well, that one, but what would be where intermediate wave 4 should come down to? The previous fourth wave of one lesser degree, that's minor. So you're looking at that. What is going to bring this out of the rafters all the way down back to here? That's a gigantic move. Gigantic. That's way more than 10%. So that is why I'm thinking somehow, I think it still probably only comes back down into here. But still, from where we're going to end up down to 17,000, that's still a pretty big move. That's a 10% move from up here to down here. So all those remain possible, and that's what we're going to be looking for once we get done with this extremely dynamic rally phase, and that is just to finish up this big rally. So again, remember that on Friday, NVIDIA at the close, wherever it is, it splits. So again, we're going to see a lot of volatility kind of go whoosh. And what I mean by the volatility is how fast this has moved. You know, when we're looking at that, NVIDIA was up $60 today. Well, once it does a split, a $6 move would be equated to this. And how much power is that going to have within the NASDAQ? It's going to really put a different spin on how far this market can go with you get these huge moves in these stocks because they split. Okay, so moving averages here in the NASDAQ. Look at that. Took a while, but here we go. Got the 50 back above the 200. There's the 20. There's the 13. And boy, they're just walking this thing up, right? That's the 1 hour. Let's go take a look at the 4 hour. And again, here we have it. And look at what happened today. On the 4 hour chart, the 13 and the 20. Let's get going. So you have the 13, the 20, the 50, and the 200. That's on the 4 hour chart. Let's go take a look on the daily chart, see what we got going on here. Same deal. Look at that. Beautiful, beautiful. All set up. Not as straight lining up, but still all turned and pointing higher. So we're not done. We're not done with upside yet. We're getting there, but we're not done just yet. So tomorrow, for economic numbers, remember next Wednesday is the Fed. Tomorrow on Thursday, we have initial jobless claims, U.S. productivity, and trade deficit. So the final revision for productivity, and which is like from plus 0.3% to 0. That could throw something off. And the U.S. trade deficit increased. That'll be an increase. So how that will, maybe that'll give us that fourth wave that we're looking for. Bigger numbers come on Friday, and that's the non-farm payrolls or the U.S. employment report, wholesale inventories, and consumer credit, but the big one being the U.S. employment report on Friday. That could, again, shove us way up higher. Why? Because today they're crediting the strength of this rally on the ADP employment report. So if we get another one with these jobless claims, well, if they kind of come in and they like it, we may not correct. We may not correct. They may just keep on buying it. So we shall see. We shall see. Okay, that's going to be it for today. Next update will be on Thursday, June the 6th.